Housing starts down, but permits up. Mixed messages on the supply side of the housing market. What's up next? We've got some great progress over at the Branford renovation. I'll give you an update on that. I'm Dave with the Bolduc Realty Group. Welcome to my weekly real estate market update. Today's January 19th. Let's check out some key market stats. Active on the market today, 3,559 versus 3,516 last week. We're up 43 houses. We had 208 new listings over the last 24 hours. That's down from the 300 we're seeing around Thanksgiving into Christmas. And we are selling houses because even though we had 208 new listings week over week, we're only up 43. So that's good news. We had 3,047 closings in December, and based on those December numbers, 1.15 months of inventory, very low inventory position still. We got some key dates here. The housing starts that came out on yesterday on the 18th, they were a mixed bag. December housing starts were higher than what was forecasted, but they were lower than what they saw the month before, which is the first time in 4 months where we've seen a month-over-month decline. I personally think the month-over-month decline is more related to the Christmas and New Year's holiday. It's about a week and a half dead time there. We're going to have to see what happens with the January numbers. Do they come back before we really know whether that was the case? The supply in Connecticut is still very low, less than 1.2 months, like I said. Where is this inventory that we need going to come from? Well, there's no evidence looking at this chart that foreclosures are going to spike. So a couple of things. We're 28% below the 2019 levels. We finished up in 2023 at that point, and 2023 finished up 88% below the peak. The last reading that we saw, which was September 2023 numbers for the number of mortgages that are greater than 90 days delinquent, which is where you're really starting to look at getting a foreclosure filed on you, was down around 40-year lows. So people that are starting to face foreclosure somehow are getting out of it, before it becomes a problem. The other note is that REOs, which is real estate owned, which means the bank has taken possession of that property through a foreclosure, REO, are down 2% from 2022 to 2023 and down 71% below the 2019 levels. What does those two data points tell me? The fact that there's a lot less mortgages that are greater than 90 days past due, and there are fewer real estate owned, that's telling me that people are selling their houses before they get foreclosed on. Why are they doing that? It's what I've been talking about all along. There's a lot of houses out there with a lot of equity. If someone gets into a bad situation, they're able to list the house, sell it very quickly for a good price, get some good money back, and then use that money for housing and in order to fix whatever issues, or at least live until they're able to get a new job, whatever the issue was. So the point there is we have very low inventory on the market right now, and we're already seeing houses that would have been foreclosed on being sold. So I don't see foreclosures or even houses that are at risk of foreclosure being a huge spike because they're already in the market. Other issues along the supply side that I'm looking at, people are staying in their houses longer. Some of them are rate locked. They've got 2.5%, 3% mortgage, and they're looking at 6.5%, 7%. They're figuring out other ways to go through it rather than buying a house. Also, there's other reasons why they're staying as well, but that is a big one. And then the other one is there's two large generations in the market. Boomers and millennials are both very active in the market. I've talked about this before. So I think until we see rates come down, boomers move out of the market, we're going to be in this market dynamic. And I think the big thing that's going to get us out is construction. I think lack of construction over the last 16, 17 years has put us in the position we're in, and construction is going to have to get us out. How much longer do you think this market dynamic is going to play out? I'd love to hear it down in the comments. PCE is due next week. The Fed meets at the end of the month, the 30th and 31st. These two events seem to be the biggest two events coming along that could impact mortgage rates. Rates have run pretty much sideways for the last several weeks. They've creeped up a little bit over the last week. You're going to see this is showing 6.6, but it's actually more like 6.8 right now. That's primarily due to the recent economic data and some Fed comments. What the Fed is going to do is going to be known at the end of the month, so that's what we're really looking forward to. Important point, new mortgage applications are up 10.4% week over week. The demand side of the house seems to have woken up after the holiday season. I just hope the supply side set an alarm. We got some significant some significant progress at the Branford renovation. We got progress in the kitchen. You see everything's been mudded and taped. All the electrical is in. The lights need to still go in. But all the boxes are there. Contractors are finishing up the last few things here. So a lot of progress in the kitchen. The windows are ready to go in. And we also got the hardwood in, the damaged floor. Hardwood is here for the new bedroom. And we got the windows there as well. So just letting the wood acclimate. Basement, we got a new wall up and a new fire door between the garage and the basement. So making some progress. That's all I've got for today. Hopefully you got some value out of it. Check out my short sale basics video that I just put out on Wednesday. It's on my YouTube channel as well. I'm Dave with the Bolduc Realty Group. Have a great day.